A couple of years ago, I made a video on how to analyze the balance sheet like a CFO, and that video got almost 2 million views. Today, I've decided to create a video on how to analyze the income statement like a CFO. So if that sounds good to you, let's dive right in. If you are new to the channel, welcome. My name is Bill Hanna. I'm the financial controller, and I've spent a couple of decades working in corporate accounting and analysis. And this channel is all about bringing my experience to you so that you can use it to grow your own career. So today we have an income statement for a company called ClickCrafted, and we have it for 3 years, 2022 all the way to 2024. And we are going to use a couple of different analyses to tell us a story of what's going on with the business. So we're going to use a trend analysis and a vertical analysis integrated together to tell us a story of the line items on the income statement. So let's go ahead and dive in. I'm going to first show you how to create the analysis. So we're going to be looking at an Excel exercise basically. And then after we create the analysis, we'll go ahead and analyze line item by line item and see what's happening in this business. So let's go ahead and begin. And before we begin, this video is going to include a link in the description that allows you to download this file. So go ahead and download it. It will include 2 tabs, one of them for you to exercise and 1 tab with the solution key so that you can create the analysis yourself and then look at the solution key for the answer. Okay, so we'll begin the work by creating the actual analysis in Excel. Let's dive in. We'll begin the work by creating the column headers for ourselves. So we'll copy and paste the years, and we'll paste them twice because if you remember, we are going to create 2 different analyses. One is a trend analysis and one is a vertical analysis. Let's highlight the column headers in a different color just to note that we are creating 2 different types of analysis here. The first one is a trend analysis and the second is a vertical analysis. And trend analysis, as you can see from the name, is just going to compare period over period, while vertical analysis compares all of the line items balances as a percentage to one item that is fixed, which is usually revenue. Why do we choose revenue to compare balances to? It's because we assume that the costs that we are spending are all spent in service of revenue. So to create the revenue, we're spending all of these expenses, right? You got to spend money to make money kind of thing. So we are creating these 2 analyses here. So for the trend analysis, we will say for 2022, this is not applicable because we don't have the data for 2021. So we're just going to put NA for that. For 2023, the formula is going to be open parenthesis, the current year, which is 2023. In this case, we are creating minus 2022. And divided by the base year, always divide by the base year 2022, right? So it grew by 92%. We will drag that to the next year and we'll see that revenue grew in 2024 by 49%. For the vertical analysis, we said we're going to be comparing all the line items to the revenue item. So when we compare revenue to itself, the answer is going to always be 100%, right? So we'll put 100% for revenue and then we'll create the other line items. And we'll basically copy and paste the same formula that we have here. Paste that here, and we'll see the cost of sales grew in 23 by 101%, which is basically doubling, and then 80% in 2024. Now, for the vertical analysis for the 2022 year, we'll say equal to the cost of sale in that year divided by the revenue of that year. And before we hit enter, what we want to do is we want to fix that cell in place for revenue. So we'll put a $sign to fix it in place, and we'll place a $sign right before the number 6, which is the row number, right? So we'll put a $sign. So this way the row doesn't move, but the column will move as we drag this formula across the columns. That will move, but the row will stay fixed in place. We'll hit enter, and then we can now drag this to the other years to see how it changed. Now we can go ahead and copy this same formula to the rest of the line items. If you're having fun learning with me and want to acquire the comprehensive skills needed to succeed as a CFO, be sure to check out the CFO bundle, which comes with 5 online courses that go through every aspect of accounting and analysis. If you're interested, the link is in the description below. The bundle includes my best-selling course, the Controller Academy, where I teach you the full accounting cycle from transaction recording to financial statement preparation. The bundle also has the FP&A Academy, where you'll learn the necessary analysis and presentation skills. You'll also get access to the Excel Academy, where you'll gain the essential skills needed to succeed in a corporate finance role. All the course material is developed using case studies because we learn best by seeing real-life examples. Find the link right here, go over to the website and check out the comprehensive curriculum. And now, back to the video. Okay, so now that I've applied the formula to all of the line items on the income statement, I can go ahead and analyze the numbers. So while I'm looking now, I have a bunch of percentages here in the trend analysis and in the vertical analysis. One thing you can do is you can read every percentage and try to interpret it, but that's going to be hard and time consuming. Or you can apply a conditional formatting that will give you visual cues into what's going right and what's going wrong in the business. So we'll go ahead and create conditional formatting that can tell us the story a little bit more. So we'll begin with cost of sales. We can see the cost of sales grew year over year by 80% in 2024. And we compare that to revenue, which grew by 49%. So that tells us that cost of sales grew faster than revenue, which is not ideal because you don't want your cost of sales to be growing faster than your revenue. Okay, so we're going to go ahead and create a conditional formatting that will compare the growth in each of these line items to the growth in revenue, and that will give us an indication whether it's green or red or good or bad. So for the 80%, we're going to highlight that, and we'll go to conditional formatting on top, highlight cell if greater than. So we're going to push it here to the side so that we can see what we're doing. And we're going to compare the 80% to the 49%. And notice that the cell is absolute dollar amounts here. Dollar amounts will indicate that this cannot move. As you drag this formatting down, this will always be compared to the revenue line item, which is good. This is what we want. Okay, so we're going to keep it at red. If it's greater than this cell, always be red. Okay, so we're going to say, okay. And that's going to color it as red. Now, I want to create another rule in the same cell that will say if it's less than this number, then make it green. So I'm going to go ahead and highlight the same cell and go to conditional formatting and choose less than, right? Change the color to green, right? And I'm going to choose that same cell for revenue, what I'm comparing to, and click OK. And you can see that it stays red because the number is 80%. It's outpacing revenue growth. Okay, now I'm going to go ahead and apply the same by clicking copy or command if it's Apple computer, or Control C if it's a PC. So I'm going to copy it. And when I paste it, I'm going to do paste special, and I'm going to choose only formatting right here. Right, and that applies the same formatting to the other cells. Let's go ahead and apply that same formatting to all the rows below it. Okay, so I've created my conditional formatting for the trend analysis, and now I can visually see what is going right and what is going wrong in the business. I can create a similar rule in the vertical analysis that will also give me a visual cue into what's happening. So with the vertical analysis, like we said, let's talk about the logic of the conditional formatting before we do it. So with the vertical analysis, we said that we are comparing each line item. So in this case here, cost of sales, we're comparing that to revenue. Right? So we see revenue is obviously 100%. Cost of sales is 31% of revenue. So what would be good for us is if the 31% here in 2024 is less than the year before that. That will give us a trend that says, hey, we are optimizing our business and we are reducing our cost of sales in relation to revenue because we're measuring against revenue. And so if I see this number go from 26 in 23 to 31, that is a bad sign that we are spending more on cost of sales, right? But if it went from 26 to say 24, then that will be good, right? So I'm going to go ahead and color it based on that, and I'm going to be comparing to the cell right before it. So I'm going to click on 31, highlight that, and go to conditional formatting. And if it's greater than, right? If it's greater than, I want it to be red, and I'm going to be comparing it to this here. right? But notice that in the box here, we have a logic that says put a $sign to fix it in place. I want this to be dynamic because when I drag this formula down or formatting down, I wanted to compare to the corresponding line item on the income statement. So I'm going to remove the $signs from here. So this way it is a dynamic referencing, right? We are referencing this dynamically. So we're removing the $signs and you click OK. And now it's highlighted in red because it grew from 26 to 31% as a percentage of revenue year over year. So we'll go ahead and create another rule that says if it's less than, then I want that to be in green. So if it's less than this number here, right? I want that to be green. And I want to remove the referencing, which is a $sign, right? So I want to make this dynamic, right? As I drag my formatting down, I want this to be dynamic and click OK. Now I can go ahead and apply that to the other cells with a paste special only format, right? And I can apply it to the rest of the line items on the income statement. Great. Now that we applied the formatting to all the rows on the income statement, we can move forward to the analysis portion of this video. So what we'll do is analyze line by line. So as we're reading this, we'll look at the revenue. We see the revenue in 2023 grew by 92%, which is great. So we almost doubled in 2023. In 2024, revenue grew by 49%. So the growth has slowed down in 2024, which could be normal if this is a startup company that has been growing in multiples in the first years of the business. Typically, that growth will slow down later as the business matures. But what you want to do as a CFO is discuss this revenue growth slowdown with the rest of leadership of the company just to make sure everybody is comfortable and this is expected of the business, or maybe something else is going on that is slowing down revenue that needs to be addressed. Okay, so let's assume that 49% is acceptable growth for revenue. Then we move to the next line item, which is cost of sales. Now, we see that cost of sales grew year over year by 80%. So when we compare that to revenue, that is in red. And the reason why it's highlighted in red is because that is saying cost of sales grew faster than revenue. So revenue only grew by 49%, while cost of sales grew by 80%. The good thing about the analysis is that now we can look and see the line items that are contributing the most to this change. So we see that hosting and platform fees grew by 145%. So that is a massive growth in that cost compared to the 49% growth in revenue. So that needs to be addressed and looked at. And typically hosting a platform fees for subscription-based companies is going to include the monthly fee that is paid to a company like AWS or Azure for the hosting and cloud services, right? So that is growing at a very high rate. And we can see that manifested in the vertical analysis because that cost typically is 7% each year when compared to revenue, but all of a sudden that jumped to 12% in 2024, right? So that's a big jump that needs to be addressed. And now you can see where this is helpful because now we're identifying the areas of the business that is doing well and the areas that are not doing so well. Okay, let's move from cost of sales to operating expenses. The first area we'll see is selling and marketing. As you can see here, the color coding that we have is telling us that sales and marketing grew by 39% in 2024. And that is highlighted in green because 39% growth is better than the 49% growth in revenue. So our cost is growing at a lower pace than revenue, which is good. Right? And as we can see the components of selling and marketing, we can see that there are salaries and wages, benefits, digital marketing. These are all doing fine. When we get to marketing events, there's a big spike here of 79%. So that's a big growth, 79% compared to revenue growth. And that tells us that we've spent more in marketing events. So as a CFO, you'd want to just speak with the marketing leadership and figure out if there is a good enough reason to spend on marketing events, or maybe this is an area of potential cost savings in the business that you might want to look at. All right, we move on from that to research and development. We can see that research and development is in green, which means that we're doing well, 49% compared to growth in revenue, 49%. So that is an area that is not growing as fast. With research and development, it's not as clear cut as the other costs because sometimes as a company, strategically, you want to spend more on R&D so that you can grow your product offering. So this is one area where it's more strategic, that you want to speak with the product team and leadership to figure out if we are able to innovate, if we're able to meet the new custom features that customers are asking for, all kind of stuff relating to R&D, whether we are innovating enough. But at least we know from the analysis that we're not overspending on R&D when compared to the rest of the business. Now, with G&A. Now, G&A, or General and Administrative Expenses, this is a cost center of the company that should be always growing less than revenue grows. And we can see here that G&A grew by 58% year over year. And that's a number that is highlighted in red because that is a high growth, 58% compared to revenue, which grew by only 49%, right? And you can see that manifested also in a vertical analysis is that G&A historically has been always just 20% of revenue, and suddenly it jumped to 21% of revenue in 2024. And because we have the details for all of these line items under G&A, we can pretty much tell which areas are doing well under G&A and which areas needs to be addressed. So for example, salaries and wages seems to be an area where we're growing super fast, 115%, and the corresponding benefits as well. 115% growth year over year compared to 49%. That is absolutely not acceptable in terms of costs rising in the business. And that can indicate that we are hiring for G&A way faster to support revenue that doesn't exist yet. So are we hiring extras because we are anticipating a huge rise in revenue in the next year? Maybe. So this is the kind of question you want to find out, is why we're spending so much on G&A. That is such a support function in the business that we should do our utmost best to control the costs here. You can see similar trends are happening in software under G&A, outpacing the rest of the business. Legal fees and in recruitment fees, again, that is rising perhaps to support all the hiring that's happening that we can see here in salaries and wages. As we move down from the operating expenses section down to the non-operating expenses, we'll look at interest and we'll see that nothing much is going on. With tax, there is a big spike, but when we look at the actual dollar amounts, they're pretty small. So it is a question to be asked, but it's not a huge concern. Depreciation is almost flat year over year and as a percentage of revenue, so this is fine. Other income, I can see a 6,000% spike here in other income, and that is definitely something to look at. So other income can include items such as interest income, for example, that is not from operation. So you have a large deposit with the bank and you're earning interest on it. It could be from dividend income on investments that you're holding. Could be gain on a sale of an asset. So you want to double check that. It could also be from foreign exchange on an asset that you're holding. So if you're holding accounts receivable or a different asset in a foreign currency and you revalue that at the end of the period, you will realize either a gain or loss. In this case here, it seems to be a gain from foreign exchange. It could be rental income if it's not part of your core business. It could be also insurance recoveries. If you have a claim with an insurance and you get it, you get compensated. That's not part of income, so it gets recorded here in other income. So you want to double check on that. That's a huge spike in other income that as a CFO, you need to figure out what it belongs to. And then finally, as I get to net income or loss, I can see that we have a loss at the end of the year in 2024, and that is represented here in a trend analysis. And that is definitely a alarming trend in the business because revenue grew from 54 million to 81 million, and yet our net income went south, so we have net loss now as a result of the overspending that we've highlighted in the areas of cost of sales. So we highlighted a weakness here, and we highlighted a weakness in general and administrative, right? So that is adding up to the company losing money, actually, a net loss at the end of the year. So I had a lot of fun teaching you this lecture here. If you liked it, give it a big thumbs up. Share it with someone that you know who will benefit from watching this, and I'll see you in the next one.